I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. It's great to talk with you today.
Looks like the shine is off high-tech stocks right now.
Yeah, it's something else to see. And I think there's a lot of lessons to be drawn from it, but for those that don't know, we have seen a big rally in the stock market since February, the first of the year. We took a big tumble just like we did in August. But the market averages came back, the Dow came back, the S&P 500 came back, and the NASDAQ rose, but didn't go up to the highs like the other two averages did. And so many of the popular stocks that we've all loved over the years are now blowing up. Apple fell 7-8% today, but it's not the only one. Google blew up on bad earnings. Netflix blew up after its earnings reports. IBM blew up. But so has other companies that don't have anything to do with technology. Buffalo Wild Wings is getting crushed today. Coca-Cola got hit recently. It goes on and on and on. But the bottom line is this earnings season has been dominated by the news of individual companies blowing up on their earnings reports. And not always are the earnings reports so-called bad earnings. It's just the news is getting sold, and it's because we rallied into earnings and we're not in this incredible bull market anymore, and that's what this really is telling us. Apple is a good one to think about because really the bad news in Apple started last summer in July. It actually had a bad earnings report and got hit really hard. It's not been the same ever since. The stock has lagged the performance of the NASDAQ and the Dow and S&P 500 on a price-relative basis. It's a lagging stock now. But the CEO, he sold out of his holdings, or, well, I should say all his holdings, but he did a lot of selling last August and since then. And as of a couple weeks ago, Apple insiders liquidated 16% of their entire holdings, and they've done this over the past couple months. So they knew what was coming. It's really not a new story. It's a story that's been going on since the summer. But what's important is most people that are not an insider that have been holding Apple, they just hold it and they just dream it'll go up, and they ignore the insider selling, they ignore the lagging performance of the stock. And that's just one stock in the entire stock market. Most stocks are doing this, have been performing like this since last summer, performing worse than the market averages. And there was a time in January where people were pretty much concerned and worried about this. But then the market averages snapped back up, and all of people's worries went away. They thought, well, I'm not going to think about this too much. The market's going up. If my stock isn't going up as much as the market, well, hopefully it eventually will. And that's kind of the thinking processes that dominate the minds of most people in the market. The problem is that we're not in a wonderful bull market in the stock market in the United States. We're just not, and that means that there's limited upside. It's almost a dead market. I don't really think most people in it are even making any money because it hasn't gone anywhere since the beginning of last year. And the thing about these earnings reports is people can do the same trick and say, well, Apple's down, but the Dow and the S&P are down a whole lot, so I'm just not going to worry about it. Well, if you go back to November, in October, there was a big rally in the stock market into those earnings too, and there was lots of individual stocks that did the same thing and blew up all over the place. And then the market held in there and dumped in January. So I kind of think that's where we are, that in this, as we head to the spring, we're probably going to see the stock market turn back down and head back down towards those lows, because when you see earnings news get sold in a market, it's a sign that a rally is over and there just isn't much upside left.
What about oil? It's seemed to have a nice little resurgence. It touched $45 for the first time since last July. Has it seen its run, or does it have a possibility for going higher?
Well, oil's an interesting thing. If you look at the oil stocks that have gone up the most, or really all of them, they've had these really sharp rebounds since February too, along with the stock market. And interesting enough, if you look at the individual Dow stocks, you'll see the same thing that I'm about to describe. But what you have with oil stocks are stocks that have had sharp drops and then have rebounded very quickly in the space of a couple of weeks. The biggest gaining stock in the entire S&P 500 is Chesapeake Energy. So if anyone wants to see what I'm looking at, when you get to your computer, type in the ticker symbol of Chesapeake Energy. And that stock went below $2 and went back up to 7 or 8, which is a huge return. But, you know, it's like a $50 stock a couple years ago. So it's just a huge rebound. And when a stock rebounds like that, it's not necessarily going to go up the rest of the year. It doesn't mean, you know, maybe the bear market for oil is over. I really don't know. But when a bear market does end, typically what you see is a period of sideways recovery where you do get a sharp rebound in the stocks, but then they have to consolidate and digest those gains and get ready to have a real move that will really last. So that's really what you see across the board with all the energy stocks, or stocks that, you know, fell really bad last year, had huge rebounds in a short amount of time, but they're now extremely overbought, and they're not likely to really have that much upside the rest of the year without first pulling back or pausing. The funny thing is, if you look at the Dow, individual Dow 30 stocks, and look at the leaders there, you actually see the same thing. Stocks such as IBM and Walmart and Caterpillar, to name three, those stocks did terrible, or were doing awful going into January, and they simply rebounded. They're nowhere near their highs, and you know, they're just kind of probably not going to go anywhere. The key is for a stock to really continue to go up after having a huge rebound. What you need to see is the stock pause, consolidate, and the 200-day moving averages for the stock to start to flatten out and act as some sort of support level. As long as a market or a stock or an ETF stays below the 200-day moving averages, you're facing a lot of headwind resistance. And actually the best times to invest are when something has been below the 200-day moving averages for several years. Those moving averages then flatten out, and the stock or market or whatever you're looking at is consolidating around it, and then it breaks through it, because typically that's what marks the start of a brand new bull market. So if you think back to the most bullish times we've seen in recent years to the U.S. stock market, you go back to 2009, and the 2012 to 2014 period what happened during those years was the market went up with this huge, powerful rally. Like you saw a move, like you've seen in the oil stocks, but then it continued. It didn't just rebound. It went up, up, and up. Like almost month after month, the market would make a new high and people would make more money, and it was fun. Interviews with you in the past, I've called the move in 2013 and 2014 the stairway to heaven for U.S. stock market investors, because the market never even pulled back 10%. And they just sat there really giddy. And in fact, I went to an investment conference at a money show in Las Vegas and in the summer 2014, and someone speaking there predicted that move to continue for 7 more years. And the people stood up and they clapped and they cheered and they loved it and they were stomping on their feet. That kind of scared me at the time. But the thing is that when you're in a move investing like that in something and it lasts for a year, it's easy to get caught up thinking that's just going to go on forever, and then it doesn't. And that's where we are in the U.S. stock market. A lot of people still have that memory of that stairway to heaven move, and they want it to come back, and they hope it's going to come back. They're not making money now, and they just dream that it can do that again, because that's really the only way most people know how to make money. They don't want to do the work it takes to research stocks or figure out how to trade. They just want to hold and have the market go up for them. But those kind of moves don't happen but every couple of years, and that's gone. It's not happening. And it could happen in oil stocks. Well, not now, but it could one day, but it would take some basing and consolidation first. And I just have to be patient and see what they do. I could say this, though, if you look at gold and you look at gold stocks, they are doing exactly this. Gold stocks are in a stairway to heaven move. They've started a new bull market. They went up 80% from their lows in February, the GDX did at least, and then it consolidated for about 6 weeks successfully and broke out again at the beginning of this month, and they're just going up. There's no pullback. Everyone wants to say they're going to pull back, they're going to crash, and they're going to do this and that because they've gone up so much. They say they're overbought, so they have to pull back. But it's just like the stock market in 2013 or 2009. Once these things get going, it's a stairway to heaven. It can last for a year, 2 years like that before there's a real huge pullback in the mining stocks. So if people really want to make money and be in a market where they can just buy and make money and don't have to do a whole lot, that's the place to do it. It's in gold, in the mining stocks. And also, I think the agriculture commodity complex is lining up to also break out and begin a similar type of move too. So I think there's great opportunities now to make money in these type of moves that people like to get into, but they have to pay attention to where they're at, and otherwise you're going to be forced to do a lot of short-term, almost day trading if you want to play the apples, and unless you want to take some selective short bets in bad stocks and stock market, which is not a bad idea. But if you just want to, how do you make money in Apple? When a stock does that, you got to be a day trader and play against the computer robot. And oil's like that too. You had this. At this point, you've had this big move in the oil stocks, and how do you play that now? I mean, you'd have to find some flex stocks that are breaking out for short-term moves and jump in it and get ready to jump out until it's lining up for a long-term bullish pattern.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Mike Swanson. Mike, one of the reasons I'm told that oil has gone up so much lately is that China is stockpiling it. It's trying to build up its reserves. But what happens once all of their stockpiles are full?
Well, if they've been helping put a bid into it, that's a buying situation that will come to an end. Once they fill the reserves up, they're done. But the thing about oil is, I think you got to look at it too in context with the entire commodity complex, because commodities move in cycles, and when you have an overall bull cycle in commodities, it starts with gold and silver, and then trickles into other commodities like, say, grains and pork bellies and coffee and so forth. And the oil and energy complex actually ends up being the last group of commodities to begin a new bull market. So with that in mind, if you go back to 1999 to 2002, there was a critical bottom put in oil market during those years and in commodities in general. Now, what happened though was gold bottomed out in 2000 and kind of based went sideways for a very long time, just like it did this time, and lifted up through its 200-day moving average decisively in 2002. If you look at a chart of the gold stocks in 2002, they went straight up over 100% in the space of a couple months, twice. So it was a stairway to heaven in spades. But the important thing I want to tell you though with the oil is oil stocks bottomed in 1999 and 2000 in that range. They didn't all bottom individually on the same exact day, but during those months, the whole entire sector bottomed out. So Atwood Oceanics, I think, bottomed out in February 1999, but some of the others didn't bottom out until 2000. But the important thing is after they bottomed, they did have a nice rally, kind of like what we're seeing now, but then they went sideways until 2003, and then they finally went into a new bull market, basically a year after the gold stairway to heaven rally happened. So I think that's kind of where we are, that we're probably, we've seen a terrible bear market for oil, but it's probably, near its end, but not necessarily over. And at the very least, the bull market, the next bull market isn't here yet. I mean, if you look at the gold situation, I was thinking it was bottoming out back in 2014, and it's taken 2 years to finally flip and go into a bull market. And it made the price of gold made an ultimate low last summer, and it wasn't until now that it's gone back up, decisively above the 200-day moving average. So I think oil, maybe it's in the same situation gold was in last summer, that, maybe it's bottomed, but now we got to, let it go through the stage one, the basing phase that precedes a bull market. And until that's really complete, there aren't going to really be any rallies that are going to last more than a couple months on a sustainable basis.
Are there any areas right now that are sort of sleepers that perhaps could have a breakout, but people aren't paying attention to them right now? Well,
I think it's actually the commodity world, in particular agriculture commodities. I really don't know. I mean, I own the DBA ETF. It's a broad-based agriculture ETF. It's trading, anyone can look at a chart, but it's got a classic stage one base, and if it closes above $21, it's completed. And it's been consolidating below that level now almost all year so far. But now I don't know anyone talking about that area of the market except possibly Jim Rogers. Other than him, it's just everyone is asleep literally on it. But that's my main candidate for that. Other markets, I do think the Russian stock market's interesting, but I don't have a position there yet. It probably has already made an ultimate bottom, but I can't. I've kind of run out of money. If I have to sell something to get into that. but I probably will one day.
Yeah, someday the ruble won't be rubble.
Yeah, definitely.
Mike, thank you very much for chatting with us.
Thank you. It's great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.